As lawmakers continue to hash out policy to avoid the dreaded, very complicated fiscal cliff, one tax increase they're trying to avoid is something called the AMT, or Alternative Minimum Tax. It could hit 26 million households, but what exactly is it? Ed O'Keefe breaks down the AMT in his latest EdSplainer.
There are lots of numbers and figures being tossed around in the debate surrounding that so-called fiscal cliff, or the $500 billion in tax increases and automatic spending cuts that are set to take effect at the beginning of next year.
The country will be hit by nearly $6 trillion in higher taxes.
We wipe out 710,000 jobs.
The economy would be negative.
One of the terms you may hear a lot about in the coming weeks is the AMT. No, not an ATM, the AMT, or the Alternative Minimum Tax. More than 26 million households probably will, for the first time, have to pay the AMT if, and only if, Congress doesn't address it during the fiscal cliff negotiations. So what exactly is the AMT, and should you be worried about it? Well, the AMT was created in 1969 to prevent the super rich from using credits, deductions, and other tax gimmicks to avoid paying taxes altogether. Now, taxpayers whose income exceeds a set dollar amount under the law need to calculate both regular tax and AMT. If the AMT is higher than their tax rate, they pay that. If it isn't, taxpayers continue to pay their regular tax rate. But the AMT doesn't just target the rich, because since AMT rules don't account for inflation, more and more taxpayers actually owe it as their salaries increase. And this is where Congress comes in, because typically lawmakers supply a fix or a patch to protect those who aren't high earners from paying the AMT. But Congress hasn't done that so far this year. If they don't, the AMT could hit more than 30 million Americans in 2012. That's up from just 4 million in 2011. Those Americans could see an average increase of $2,700 on their 2012 tax bill. This could include you if you're married, filing jointly, and you and your partner make more than $45,000 a year, if you're single, filing as head of household, and make more than $33,750 annually, or if you're married, filing separately, and make more than $22,500 a year. You'll hear a lot about the AMT in the coming weeks during fiscal cliff negotiations. At least now you know what it means.